Welcome to another episode of Crypto TV. I'm your host, Ornella Hernandez, here to talk all things Web3 and crypto. Today, we're going to get into the newly approved Spot Bitcoin ETF and what that means for the industry. So stay tuned. After months of speculation, the SEC approved the first Spot Bitcoin ETFs last week, and everyone was going crazy on social media posting about the news and just so excited about the promise of making Bitcoin more accessible to mainstream investors. But I want to question, who does this development actually benefit the most? Let's get started. I'll give you a quick recap first. The U.S. Securities and Exchange Commission, the SEC, approved 11 different exchange-traded funds or ETF applications, including some from big names such as Fidelity, BlackRock, and Grayscale. ETFs carry the promise of making Bitcoin more accessible to mainstream investors who can now just buy shares in a publicly traded listing rather than having to purchase and custody the cryptocurrency themselves. And this could lead to major capital inflows and a long-term rise in price, rewarding those early investors who factor Bitcoin into their retirement plans. Many of the ETF providers have been offering low fees to start. As you can see in this chart, the Bitwise Bitcoin ETF has the lowest fee and even has a waiver that forgoes all or part of the fees for a period of time, while some asset managers like Grayscale have the highest fees. In the first day of trading, $4.6 billion of shares were traded as investors jumped into the landmark products on January 11th. There was a short-term spike in price. Bitcoin even hit a 2-year high, but it has since retreated to a level that it was before the approval. So while some believe that this may have marked a new era for crypto and the financial system as a whole, others do not, such as major money manager Vanguard, chief rival to BlackRock, which has pledged not to carry a Bitcoin ETF of its own at all, nor to even offer funds from other issuers on its trading platform. This actually led many users to threaten to close their Vanguard accounts, claiming that they would rather hold their money at a Bitcoin-friendly institution, and many have chosen to transfer their assets out. Other brokerage platforms from Citi, Merrill Lynch, Edward Jones, and UBS have also been slower to follow suit and may evaluate these products later in the future. Now, there's a few things that I would like to point out. There was so much fanfare and massive hype leading up to this Bitcoin Spot ETF launch that frankly, there's something that feels surreal about the SEC finally giving into the fact that Bitcoin is a bona fide commodity on par with gold and copper or crude oil, something which the Commodity Futures Trading Commission actually figured out years ago when it approved Bitcoin futures ETFs, by the way. That's why this line from the SEC Commissioner Hester M. Pierce kills me. Today marks the end of an unnecessary but consequential saga, she wrote in a January 10th statement, claiming that it took 10 years after the filing of the first Spot Bitcoin exchange-traded fund product application for the commission to finally approve them. An unnecessary but consequential saga. Love it. Because there was no real reason to drag it out for a decade. And so now, even more surreal than the news itself, was the fake news moment that led up to the launch. On January 9th, a day before everyone expected the approval, the SEC's X account tweeted out that it had actually approved ETFs for Bitcoin. Hours later, though, the SEC claimed that its account was compromised and that an unauthorized post was made. The SEC has not approved the listing and trading of Spot Bitcoin exchange-traded products, it said. But some people had already moved millions of dollars, all because of that one tweet that ended up being unauthorized, as the SEC called it, or in reality, simply premature. And maybe it's the journalist in me, but I find it bizarre how people make decisions around things that they see or read online and take it as truth without verifying or validating with real people before accepting something as true. So this fake SEC tweet is a really good example of that, and how news distribution could actually benefit from blockchain tech being used to authenticate information and to point out misinformation. Personally, I'm hoping that blockchain tech will be used more in the future for this very purpose, especially as more and more content is created with artificial intelligence tools that circulate the internet. And we don't know what is real and what is fake. So understandably, people were pissed at the SEC more than usual. Look at some of these comments. Layla Halpern said that you usually give penalties in the hundreds of millions of dollars when other private investment firms make mistakes like this that manipulate the market. What will you do to fix this? Rahim Matab, who I've interviewed before, wrote, SEC manipulating markets, SEC talking about crypto scams, but can't secure their own social media. This has to be a freaking joke. Someone's ought to take responsibility. I agree with you, Rahim. And Eric Weiss questioned if the account was actually compromised at all, or if there was a drafted tweet released prematurely by someone who had authorized access to the account. There is a material difference, and you need to be transparent with the investing public, he said. So, in the spirit of being transparent with the public, the chair of the United States SEC, Gary Gensler, went on TV to explain why the regulator had a change of heart. Appearing on an episode of CNBC's Squawk Box on January 12, Gensler said that Grayscale's legal victory against the regulator in August 2023 was the main catalyst behind the recent approval of Spot Bitcoin ETFs. On August 29, U.S. Court of Appeals Circuit ordered the SEC's to annul the decision to revoke Grayscale's GBTC listing application. So, not necessarily telling it to approve it, but just that it couldn't reject it.
I'm a deep believer in the rule of law and a respect for the courts, and taking a new court decision into consideration, we move forward. I think this is the most sustainable path forward.
Gensler then reiterated that the regulator does not endorse Bitcoin, however. So then, what is all of this hullabaloo actually about, and why are people freaking out about this so much? Well, the case for US-listed Spot Bitcoin exchange-traded products is that now fund managers, allocators, insurance funds, and pensions could take advantage of this to add Bitcoin to their portfolios, but more so as a tax-efficient way of hedging any of their safer bets to potentially profit from crypto, which is actually the very thing that seeks to upend the traditional financial system that they thrive off of. But we must remember here, folks, that ETFs don't actually allow you to buy or use crypto. You're buying shares in a fund that technically buys and holds crypto on your behalf. So ETF holders will only ever benefit from exposure to Bitcoin's price. Shareholders of Bitcoin investment products, whether spot ETFs or otherwise, cannot send their Bitcoin to anyone, aka they can't use it as money. And come to think of it, it's not like spot ETF shareholders are storing their value with Bitcoin either. And isn't Bitcoin as a store of value like its main use case? I mean, they are putting their trust in the ETF issuer, whether that's BlackRock or whoever else, to keep their investment secure, right? For example, BlackRock buys Bitcoin and promises to keep it safe for you, unless, of course, the fund loses any right to claim that it's backed by actual crypto. And plus, investors have to pay fees to the ETF issuers as a token of appreciation of their trust in them, right? That's how they make money. BlackRock and Grayscale in particular, with its high fees, is making money that way. So I ask, what is the purpose of a spot BTC ETF for a retail investor if they're not getting to actually own or use crypto? Then they won't reap the true benefits of it. They won't get to hold it as a hedge against inflation or use it to buy a digital asset or claim that it ever gave them financial freedom. Well, we'll have to see just how successful a spot BTC ETF truly can be. Blockworks reporter David Canellis wrote, "The years-long battle over spot ETFs is purely about gaining exposure to Bitcoin as cheap and as efficient as possible." He goes on to say that it will be sad if Bitcoin were ever to forcibly transform into a hollow version of itself, a token symbol of risk pushed around spreadsheets and never used. Sad indeed, David. And what has ensued is basically a marketing war between the funds now. BlackRock, for example, launched an ad for its newly listed Spot Bitcoin ETF last week. This ad, one of many to come, I'm sure, is an almost 2-minute video featuring a BlackRock executive, Jay Jacobs, outlining Bitcoin's value proposition and how investors can receive exposure to its new ETF. Let's watch it.
Digital asset adoption has significantly accelerated over the past decade, with profound implications for the future of finance. Bitcoin is the original cryptocurrency to gain global adoption and has continued to maintain its dominance despite thousands of others coming into existence. You might have noticed Bitcoin make its way into our everyday lives, from Bitcoin ATMs to various merchants accepting Bitcoin as payment, further driving interest in what the future holds for the cryptocurrency. Investors have taken notice, as institutions and individual investors alike have been adopting Bitcoin into their investment portfolios, with some viewing it as a potential store of value and others as a potential game changer in how money moves around the world. But for many investors, holding Bitcoin directly can be complex. That's why we launched IBIT, the iShares Bitcoin Trust, an ETF that provides investors convenient exposure to Bitcoin. Here are 3 things to know about IBIT. Access. IBIT enables investors to access Bitcoin within a traditional brokerage account, just like stocks, bonds, and other ETFs. Convenience. IBIT can help remove operational burdens associated with trading and holding Bitcoin directly, as well as potentially high trading costs and tax reporting complexities. Quality. IBIT is built by BlackRock, a leading ETF firm with expertise across ETFs and a history of innovation. It is a new day for Bitcoin. Access IBIT through your online brokerage or discuss with your financial planner to find out how IBIT can fit into your portfolio. Visit www.ishares.com to view a prospectus, which includes investment objectives, risks, fees, expenses, and other information that you should read and consider carefully before investing.
In response to the ad, Bloomberg ETF analyst Eric Balkunis tweeted, "This is how you market to rich boomers, folks. The calm disposition, soft new age music, suit with no tie. Everything about it says, it's okay now, the adults are here." Indeed, it is targeted towards an older generation, so we'll see if these ads work on them. And this video is just one of many. Bitwise, Hashdex, Vanik, ARK Invest, Grayscale, and Valkyrie have all done some form of mainstream public advertising so far. And now, there's also talk about an Ethereum ETF and even an XRP ETF in the works. But before that gets confirmed, we will welcome a special guest to talk about all of this and more on CryptoTV. So stay tuned. Our guest today on CryptoTV is Jeff McAllister, who is the Managing Director at Hex Trust Markets. How are you, Jeff?
I'm fantastic. Thanks, Ornella. Great to be here.
Thanks for joining us. So today we're going to talk all about digital asset custody. But first, I wanted to get your take on the approval of Bitcoin spot ETFs. I just spoke a little bit about my views on that, how, yes, it is historic and a big victory for the industry and those outside of the industry, just the greater financial community. But it also might not let people hold or use their Bitcoin. So I wanted to get your thoughts on this.
Yeah, I hear you. And of course, extremely topical and a really big event. I think I'm aware of the arguments and some of the question marks on it, I guess from more of the purists, but ultimately it's bringing investment into the industry. And end of the day, people have a choice. So they can choose if they want to hold their own keys and buy Bitcoin, and one day, I guess Ethereum will be next.
I think so. I'm even hearing rumors about XRP after following Ether, so we'll see.
Why not?
Why not?
Why not? And I'm sure there'll be various sort of indice trackers as well, ETFs on indices and themed baskets as well. So yeah, I'm sure there'll be many more ahead.
Yeah.
But I think ultimately good. and people have a choice. So yeah, let them come.
Always good to have a choice. And so do you think that you'll be investing in Bitcoin spot ETFs?
Personally, I'd rather hold it myself. So,
Okay.
but I understand the use case for allowing a broader range of investors to access the market. So yeah, I mean, it's great. I think it's really good.
Okay. Yeah. Hopefully it'll be successful, and we'll see what happens in the next coming months. All right. And so now let's talk a little bit about you, and then we'll get into Hex Trust. But first, how did you get into crypto in the first place? Is there like a memory or a moment that you can recall when you first learned what crypto or Bitcoin was?
Yeah, I learned about it a long time ago. I didn't buy much, unfortunately, but I learned about it. Probably 2014. I was, Max Kaiser. I don't know if
Yeah.
familiar with him, of course, but yeah, I learned about it from listening to him go on about it and on about it a lot, and I thought it was interesting, and I didn't proceed to get close to it until 2018. I was looking a bit more closely and started to play a little bit more and have a closer look, and start custodying myself a little bit, and then eventually I eventually made the move 2 years ago, a bit over 2 years ago, moving into Hex Trust after 25 years of TradFi.
All right. So Hex Trust is a custodian, and you work as the managing director at the Hex Trust Markets. So could you just explain exactly what your role in the business is?
Sure. So Hex Trust, yes, was founded initially in 2018 in Hong Kong, and the founders had a very good vision of the requirement for institutional grade custody to help the adoption of the institutions and when they come in. And then after launching that a couple of years ago, they launched Hex Trust Markets as well. And Hex Trust Markets is a broker-dealer that facilitates client access to the market for mostly for our clients in custody.
Okay, so more of an OTC trading service.
Yeah, 24/7.
Okay,
yeah.
Gotcha. All right, okay. And so you said you have been in this role for how long?
Okay, so at Hex Trust for 2 years. Initially, I started as head of risk for the business, for the group, and then early last year, I was asked to step in and run the markets business.
Okay.
And I've been doing that since then, and yeah, it's great.
Okay, so let's just break down a little bit what a custodian does, and maybe the importance behind digital asset custody versus self-custody.
Yeah, so very important. So a custodian we're regulated and licensed, and we have a trust license in Hong Kong. Here in Dubai, we're fully licensed under VARA, under the custody rulebook. So we have a proprietary platform called Hex Safe, which is the platform which manages the client's keys effectively. Okay. So the technology allows the client to have completely segregated wallets. Okay, so client assets in custody with us, they remain on the client's balance sheet. Okay. They're not our liability.
Right.
They don't belong to us. They're not on our balance sheet. They're on the client's balance sheet. So unlike when you put your assets on an exchange.
Okay.
When you put your assets on an exchange, then it's like putting your money in a bank.
Right.
It's a liability. Yeah, there's a liability. So the bank owes you the money. It's a liability, and it's on the bank's balance sheet. And so the cash is on the bank's balance sheet, and the liability in your account is what they owe you. And the exchange is the same format, but with a custodian, it's your money in the custodial account, and it's fully, in our model at least, it's fully segregated down to the asset level, so the client can see their assets in our platform, but they can also see the assets independently on chain.
Okay.
every second of every day, I can see their assets exactly where they are.
So then what are the risks associated there? You said you were working in risk management at first in Hex Trust. So what are the main risks that you advise your clients on?
So risk management at a custodian in a business like Hex Trust Markets is very much like a bank, as in, so on the custody side, okay, the assets are fully segregated. They're on the client's balance sheet. So that's pretty clean, very clean from a financial risk point of view. But of course, there's operational risk management frameworks to have in place. And then on the Hex Trust Markets side, which is OTC trading, and Hex Trust Markets faces clients as principal, and we have to manage risk in terms of market risk, price risk, as well as credit risk, counterparty credit risk, operational risk, liquidity risk. It's very much the same as a capital markets trading business in TradFi. Okay. So there's all the same risks to manage, plus a few new ones maybe.
All right. I know that this topic is very important to you since you're actually part of a non-profit crypto risk office. Is that correct?
That's right.
Yes.
Crypto risk office.
Okay. And could you just explain a little bit about that? I know that you guys deal with precisely this topic of risk management.
Yeah. So 2022, everyone probably remembers, was a complete train crash for the crypto market. And I started in December 21 and in the industry, and I was, watching it sort of firsthand crash. And I was pretty surprised at how immature risk management was across the industry, underinvested, like very little investment in risk management, industry-wide. So, so after the whole thing ended in 2022, I decided to, along with my co-founder, Alessia, to set up the Crypto Risk Office. And then we've had more community members come in and help build content and share content for people to learn about risk management.
Okay, so it's like an educational platform.
Yes.
Okay.
Yeah.
Amazing. How's that going?
Great. Yeah, it's there to sort of help bridge people from TradFi into crypto and introduce the Web3 community that are not familiar with TradFi risk management concepts to the risk management side, which is important, which TradFi actually has spent a lot of time on.
Okay.
And so we sort of need to bring this together.
Do you have any horror stories of your time in crypto, of any maybe scams or hacks that unfortunately you've been victim to?
Look, I mean, only the ones that everyone else has sort of observed, in the market. I guess, fortunately.
Okay, good.
Touch wood, but but just observing that train crash that was 2022.
Yeah. So FTX mainly.
And
Celsius.
Celsius and so on, and many more. But there was just a lot of basic risk management that wasn't done.
Okay.
Yeah.
Okay. So educating people about that.
Yeah.
Okay, I see. All right. So now let's. You said that you're based in Dubai and focused on the UAE and GCC market. So let's localize things. And I want to talk about how the business is going, basically.
Yeah.
Now that we are in the beginning of 2024, and a lot of companies, including Hex Trust, that have moved to the region are now finally getting their operational licenses. So what does that mean exactly? Like, does that mean now they can fully start operating? Like, what can we expect in 2024 for all of these crypto companies, including yours, that are now in the region?
Yeah. So it's a very good point. So we were actually fortunate to be the first company to get an operational license in February last year.
2023?
On the custody side, yes. And that meant we could onboard clients at the time. The framework sort of evolved a bit and we got our full license in November. But yeah, for much of last year, there were not many other licensed people in the market.
There were people
So there were people here, but they were building and working on getting their license. And it was, so some of them wanted to operate and they couldn't. And so, of course, we have operations out of Hong Kong, and we have other entities in Singapore and Europe as well. But our Dubai entity was sort of, because we're very much B2B institutional, we're also kind of looking for the rest of the market to get licensed as well.
Okay, of course, to be on board.
Help the big business, yeah.
Okay, that makes sense.
Exactly, and we're starting to see more and more of that happening now.
Okay.
Which is great.
So then tell me what else you're excited about for this year. Any goals that you have both personally and professionally?
Yeah, sure. So we're expecting to announce some additional licenses, shortly. I won't pre-announce anything, but yeah, that's going to be very exciting, and will help to serve our clients better here and globally from here as well. And really just getting more across the whole community and meeting and knowing everybody here.
Okay.
And looking to help them out, because as I think I mentioned earlier, everybody needs a custodian.
Yes.
So and on top of the custody, we can, we also have the markets trading service. We have an issuance entity, and we have some other services coming soon.
Okay. So does that mean going to a lot more events?
It's one of the things which is I think very strong in the crypto community, is because it's an industry full of startups.
Yeah.
Right. And people are looking to network, looking to engage, and meeting in person is the best way, right?
Yes, I agree.
Yeah. And Dubai is great for that.
Definitely. There's always something going on.
Yeah.
How else would you describe the community and the ecosystem in Dubai and Abu Dhabi now? Ras Khaimah is a growing industry player. So how would you describe the startup industry here?
Look, I think impressive. It's and certainly in the Web3 space, I think it's probably fair to say, in many ways, world leading. Also reminds me in many ways of Hong Kong. Okay. Because
I've never been there.
Yeah, Hong Kong's amazing, and it's super commercial. Hong Kong, very, really good for doing business. So it's a real business center, and the geography lends itself very nicely to the proximity of the city and the offices, and the ease to meet people. You can have half a dozen business meetings every day.
Oh, really?
And you walk from one to the other in 5 minutes or 10 minutes. So super good for that. Dubai is a bit more spread out.
Yes.
But it does have this very commercial nature, and people are really looking to meet and engage and say, how can we work together? So it's really good.
Okay. No, I love that as well. Everyone's has a very collaborative spirit, I would think. All right. And now, is there anything that you find the most rewarding about working in crypto, and the most challenging that you can share with?
Sure. Good. Rewarding is, I think it's knowing that you're working in building something new that is ultimately going to be really, really beneficial to everybody, because we're working to bring the value layer, online. So the value layer of the whole economy is going to come online, enabled by all the DLT technology and that is being introduced.
Yeah, and I guess that's going to happen regardless, right? Everything's just virtual online now.
The value layer of the economy will all come online on chain. It will, Craigslist, everything on there will be NFTs. You want to buy something on Craigslist, you'll be buying the NFT that gives you the right to own that bicycle.
So you think that feature is inevitable?
100%. Yeah, 100%. It's just a matter of when.
Okay. And what's the most challenging part about working in crypto and Web3 and blockchain?
Change. So
you like change, or you don't like change?
I'm good with it, but to be honest, I think generally people are not looking for change, right? And I think especially industries that have been around for hundreds of years, so TradFi,
right?
and the change that's coming there. I mean, we're talking about changing the monetary system. I mean,
It's a big deal.
this is like a big deal.
Yeah.
It's a big deal. I know people are very excited about AI, but like changing the way money works and the way money is created and custodied.
Is that a word?
It's a big deal. Yeah.
Yeah, no, I agree with you. All right. Well, we are running out of time. So just if you could tell the audience what's the best way to get in touch with you and to learn more about Hex Trust and Hex Trust Markets.
Sure. Thank you very much. Hextrust.com, and reach out to us, and we would love to help you with custody, trading, and we look forward to meeting you.
All right. Well, thank you, Jeff, for your time today.
Cheers. Thanks, Ornella.
And everyone, please stay tuned for the rest of Crypto TV.
Bitcoin is currently trading at $42,443. Ether's price is at $2,514 today. Sway is up 51.02% this week with a price of $1.26. And DYDX governance token is also trading green this week, up 17.39%.
That's all for today. Thank you guys for tuning in, and make sure to give this video a like and let me know in the comments how excited you are about a Spot Bitcoin ETF. And I'll see you guys later.